Welcome back to the Goofy Investing channel. This video is going to be a stock analysis on the Hnst company per subscriber's request. Today is the 13th of July. From what I understand, I guess former President Trump, there was a little assassination attempt. So thoughts and prayers going out to President Trump and democracy and so forth. Okay, so let's get into it. The Hnst company. This is a company that focuses on consumer discretionary. However, these are more not so much discretionary. They're more needs-based items. But I think they're discretionary in the essence of their premium needs items. So what I mean by that is you have premium branding in stores, and then you have generic branding in stores. Okay, the Hnst company is on the higher end of the premium branding, so their diapers and wipes are going to cost more, and you're going to be paying more for the brand presence and ESG efforts and all the safer materials and so forth. Right? Um, you know, we're going to be looking at multi-bagger potential and analyzing some financials and so forth. But let's get into it. All right, this company is currently trading at a $318 million market cap. It is headquartered in Los Angeles, California, which I'm not really too much of a fan of because the taxes over there are crazy for corporate entities. But okay, whatever. They have about 176 employees. They're a consumer staples company, all right, for personal care products. Um, let's get into their actual investor pitch deck, which is pretty much their quarterly earnings. Um, so they're coming up this new initiative, the Honest Standard. Okay, I mean they're based on ingredients, ideals, and industries. All right, and pretty much what that consists of is they have an in-house lab that tests the materials for different pathogens and different bad stuff to make their products more safer for people and so forth. All right, and I understand that I think that there is I think they're onto something as far as like a quality aspect of things for quality control, because I know that there are a lot of companies out there that do change different ingredients, like as far as food and materials that are not so much consumer friendly to their health, um, for the sake of margin improvement and corporate performance. So there's that fine line that's treaded with American companies, especially when it comes to that stuff. And that's pretty much the Honest company's edge in what they're trying to sell. We're an honest, clean company. We're never going to sacrifice the materials that conflict or conflict with the consumer's health initiative and so forth. So that's something to consider. All right. Here's their portfolio diversification percentage. Of their 344 million in revenue, 63% of it is diapers and wipes, and skin and personal care is 26%, while household and wellness is 11%. I like the portfolio diversification. Obviously, get it how you can get it. However, whatever it takes to get the bag, you get it. But as far as diversification in the portfolio to create a lifestyle brand, if you will, I think it's important for an important initiative for the company to do that. And that might hit margins in a negative way, but we'll talk about margins here in a second. All right. Um, ESG household penetration is growing at 13% over the past 4 years as a CAGR. Um, more and more consumers are being more cognizant of materials and ingredients to the stuff that they're buying and letting into their house. All right. I'll admit I'm starting to look more into that type of stuff for my household. Um, Not so much as like diapers and wipes, because I mean my kids are a little bit older, but more so like maybe the cleaning materials. I might get biodegradable all-purpose spray cleaner for my house, as averse to your traditional big-time chemicals. Don't get me wrong, I still use stuff like Clorox and different Clorox and Pine Sol for the toilets and bathrooms and so forth, to get rid of that grime and all that good stuff. So, but when it comes to all-purpose spray, like spraying down counters and stuff, I like to use biodegradable, the Eco Spray from Walmart. I like to use that. So I can see this type of movement shift towards the consumer, and the power that this brand could command later on. All right. And I'm a millennial generation, so I think that the Gen Z generation will be more cognizant of this stuff as they get older. All right. um the Honest, next chapter, they got new management in place. They underwent a transformation initiative that they started earlier last year. And what that consists of is they're working on the margins and recreating the operational aspect of the business, and expanding into different retailers and online and so forth, and reformatting their logistical supply chains and renegotiating the pricing on logistical transportation and so forth. All right. They pulled out of, and that included pulling out of international markets and focusing more exclusively to the United States. All right. Um, Here are the results of the brand initiative. All right. I'll pull up the chart. Okay. So gross margin has improved 600 basis points. That's dramatic. All right. So they saw gross margin expansion from 28% to 34%. And operating OPEX went down 1,100 basis points. So going down in the opposite direction, or the opposite that attracts, if you will. The gross margin has increased while the operating expense has decreased. And they saw 10% revenue growth on the top line. This is nothing but short of outstanding performance, if you will. We'll go to the Honest Company financials and we'll take a look. All right. So revenue has increased. All right. And we see the OPEX is decreased. Shares outstanding, year over year, we're not seeing too much dilution, but from 2019 to trailing, there was maybe a 3x dilution. But that came undergoing review of their 10K. There was a lot of convertibles that transacted. How do you say? Let me see if I can find it. These notes, let me see, maturities, bear with me. There was a lot of convertible notes that were executed upon their IPO. All right. So pretty much when they were a private company, prior to their IPO, when the IPO happened, there was a bunch of convertibles waiting to be exercised per the agreement of an IPO. So let's say I had some preferred stock units that were convertible in the actual event of an IPO as a disclosure clause, and that means that I'm going to loan the company money in the form of preferred shares, and then but years later, when the company goes public via an IPO, on the IPO day, I'm allowed to convert all of my stock. All right. And that's exactly what happened, which pretty much, here it is. on page 89 of the 10K. So when the company went IPO, that's when all of these redeemable convertible preferred stock notes actually were converted. All right, increasing the float of shares outstanding to the honest company, if you will. All right, so everything checks out with the auditing and so forth. So they're good there. All right, going on to balance sheet analysis. Their net cash, but they not net cash by much. So they got about 6 million net cash. Going to their burn rate, they're burning about from 2022. They peaked on burning about 50, shy of 50 million, and 2023 they went to 40 million, and then trailing they're at 21 million burn rate. All right. So, looking at their balance sheet though, and the amount of cash that they were burning as opposed to how much they had available in 2022, it looked as if they were going bankrupt. All right. So, the way I see this, okay, how do I see this? Their performance. All right. All right. Well, I see their performance as in they had no choice but to do this, or they were going to go bankrupt. Okay. They had no choice but to do this transformation initiative, or else you're just going to go to bankruptcy. All right. Um, and the 10% revenue growth was ISS was attributed to Nick Vlahos, the prior CEO's expansion into Walmart. I assess that lump of revenue growth was attributed towards Vlahos's past leadership, getting Honest Company products into Walmart, and now Honest has realized that in their actual revenue growth rates per last year, if you will. All right. And as far as the margin and transformation initiative, downsizing of the employees, getting out of international markets, changing up their OPEX and expanding their margins, I attributed that to the new CEO, um, which is, I guess, part of the ESG initiative. What's her name? I forgot her name. Honest CEO. Let me see here. I forgot. There it is. Carla Vernon. Okay. I knew that. All right. I just had a little brain cramp. So the margin improvement and OPEX cut attributed to her, and the actual transformation initiative, which is still undergoing. All right. That's her plan as the CEO. All right. Let's look at Honest insider activity. We'll go to the NASDAQ. All right. So, what do I see with most of their activity? Well, I see nothing but sells. All right. Direct sells. All right. When's the last time we had buys? Well, the CEO was buying this in the lower ones, mid to lower one price range on the Honest stock price action, and she came in and started buying the stock because she knew that, I guess she knew that the transformation initiative would save the company from going bankrupt. This price action in the ones pretty much prices the company to bankruptcy, if you will. So that's something to look at. Now she has been selling at the, let me see here. She has been selling more in the $2, mid $2 ranges. So that's affirmation from all the directors and officers that this stock is overvalued over the $2 range, if you will. All right. What do they multi-bagger potential? Let's talk about it. All right. Procter and Gamble. We're not comparing Procter and Gamble to the Honest Company as competitors on a mutual ground, even though operationally they are. All right. I'm comparing them as if Procter and Gamble is a leader that Honest is disrupting. All right. Their market share is Honest's opportunity to take. And that's what I'm comparing them to. Honest, how can the Honest, what does Honest Company have to aspire to? All right. Well, what they have to aspire to is being the next Procter and Gamble. All right. So that's what you have to compare Honest to. They're the leader of the model. All right. The next Procter and Gamble, if you will. All right. And where's the value creation? All right. Well, the value creation is in the free cash flows, and the buyback and dividends is pretty much the value creation of Procter and Gamble right now, as they're a mature company. All right. Procter and Gamble does about 84 billion in revenue, as averse to the Honest Company, which does not even 1 billion. They do a fraction of a billion. So the Honest Company has the opportunity to disrupt Procter and Gamble long term. That's the shareholder. That's the shareholder potential, or that's the value that the Honest Company has to bring. All right. So we'll look at the earnings estimates. All right. It looks like the Honest Company is projected to grow over 4.5% moving forward in the next however many years, whereas Procter and Gamble has under 4.5% to grow in the upcoming several years. Now, are these numbers accurate? I don't know. All right, could Honest Company accelerate the revenue growth to double digits? I think it's possible. All right, it just depends. All right. Um, but how do I see the Honest Company as an investment right now? I think it's too early to invest. Me personally, I think it's too early to be an investor in this company. They're not projected profitability till 2026, and their growth rates don't justify me getting involved this early. All right. I'm not really. Yes, they had outstanding performance on a 180 flip with the new management. But the way I see it, I don't know necessarily if they did that to unlock shareholder value, or they did that because they had no choice, or they were just going to lose their jobs because the company would go bankrupt. All right, that's my take and my opinion on the Honest Company. Um, I don't hold any shares of the Honest Company, as a disclosure. Can this be a multi-bagger? Yes. All right. Procter and Gamble, at a valuation standpoint, they command price to sales of over 4.5%, whereas the Honest Company, they have price to sales under one. All right, at a point under 0.90% or 0.90. Okay, so there is potential for margin expansion on a price to sales aspect, but I think that the Honest Company is not going to be able to command that until they get to profitability and their margins expand even further. Listening to their conference call, their CFO did not sound too confident as far as continued margin expansion and revenue growth. So they're going to, they're pretty much affirming that they're performing that their projected guidance is still going to be within this 4 to 6% annual, 4 to 6% revenue growth moving forward beyond 2024, and slight continued expansion, not as fast as what they've been doing. All right, low to single digit millions in positive adjusted EBITDA. All right. So that's my take on the Honest Company. I think it's too early right now. Maybe late next year. We'll see. Monitor the performance and price action. Where do I think the stock? What do I think about stock price action? I think the market is going more towards transitioning into small caps. So I think we could see the Honest Company run, but definitely just as easily we could see the Honest Company just go right back down into the ones if there's any turbulence anywhere, or any misses, or I mean any negative news. Maybe low twos, maybe not the ones again, but that's just how I see the Honest Company. All right. So I mean, if you're investing in this right now, I'm thinking your time horizon needs to be multi decades. Maybe 10, 20 years, 10 to 30 years of slow churn growth in disruption in Procter and Gamble to come. All right. And this can, you know, this could be the multi-bagger, but in a sense, you have to be very patient and have that time horizon. All right. So sorry this video took a little bit long, but quite a bit to uncover. So anyway, thank you and enjoy your weekend, and look for me for more videos. All right. Take it easy.